Hey folks, Simon Ree here with a quick video just to explain the concept of end of quarter window dressing. What's it all about, what's going on, and what impact could it have? Well, to explain what end of quarter window dressing is in the stock market, I'm going to use the analogy of an artist. So imagine you're an artist with a gallery filled with your artwork, and every 3 months you have a big showcase where lots of important people come and view and review your work. Now, you want to make sure that your gallery looks the best it can for these showcases. So what do? Well, just before these events, you might rearrange your artwork and you place the most eye-catching, the most beautiful pieces at the front or where people are most likely to see them. And this way, your gallery will leave a strong positive impression on your visitors and the people who are coming to review it. Now, in the stock market, some fund managers do something similar with their portfolios at the end of each quarter, hence the term end of quarter window dressing. So here's how it works. So the stocks in your portfolio or in the fund manager's portfolio are like the artwork. So fund managers, much like the artist in our example, they've got a collection of stocks rather than paintings. And these stocks are what make up their portfolio. Now, the showcase is like the quarterly reporting period. So just as the artist showcases every 3 months in our example, fund managers have to report their performance to their investors every 3 months, and they want their performance and also their portfolio to look as attractive as possible. And so here's where they rearrange the gallery by trading stocks. So to make their portfolios look better, some fund managers will engage in a practice known as window dressing. So this means they might sell off stocks that haven't performed well during that quarter and buy stocks that have seen recent success. The end goal is to make the portfolio appear as though it's been filled with winners all along. And so by showcasing a portfolio that looks as though it's filled with winners, i.e. successful investments, fund managers aim to leave a better impression with their investors. And this can help maintain investor confidence, potentially attract new investors, and importantly, retain assets under management. So which stocks or sectors are most likely to be affected by window dressing? Well, for that, we can come across to Koifin, which offers these market dashboards, and it can show us the year to date. I mean, you can use quarter to date. They're going to be the same because it's the first quarter, but shows us which sectors have been the best performers. So the best performer by far has been the semiconductor sector. All right, so you would expect that fund managers engaging in this window dressing practice would want to make sure they've got semiconductors in their portfolio, and of course, 20% of the semiconductor index is NVIDIA. All right, so everybody's probably going to want to showcase the fact that they own some NVIDIA because they risk looking stupid if they don't. The other sectors that have performed really well quarter to date have been the communications sector. That is predominantly Meta, Google, Disney, and Netflix. So generally, these are the sorts of stocks that they could be touched up into the end of the quarter. The next one is the energy sector, which has had a storming year to date. The main stocks there are ExxonMobil, Chevron, and ConocoPhillips. Then we've got the financials, which is dominated by stocks like Berkshire Hathaway, JP Morgan, Visa, and then we've got the industrials. This is a far more diversified index, but the biggest stocks in XLI are things like General Electric, Caterpillar, and Uber. So as we get into the end of quarter, you could expect the biggest stocks and the best performing sectors could get nudged up a little, and maybe some of the biggest stocks and some of the poorer performing sectors like real estate, utilities, consumer discretionary, maybe they get sold down a little bit. It's important to note that while window dressing may create a more pleasing looking snapshot of a portfolio, it doesn't change the long-term performance of the fund, and it's very unlikely to have anything other than a very minor short-term impact on the stock market. Today is Wednesday, the 27th of March. We've only got 2 days left this quarter because obviously the week and the quarter is shortened by Good Friday falling this Friday. So if we do see stocks like NVIDIA, Meta, Disney, JP Morgan trade higher into quarter end, that's a very plausible reason why. There's your explanation on end of quarter window dressing. I hope it helps, and I wish you good trading.